Recently, we saw reports that video game giant Electronic Arts was going to go private after a $55 billion deal where it was acquired by the group, including Silver Lake, Affinity Partners, and maybe more interesting, the Saudi Public Investment Fund. Burcu Esmer is a senior lecturer in finance at the Wharton School, as well as co-director of the Harris Family Alternative Investment Program, and she joins us to discuss this move. Burcu, great to talk to you again. How are you?
Very good. How are you, Dan?
I'm good. Thank you. So when you hear, you talk a lot about these types of deals, but when you see this one, and I guess especially because the Saudi Public Investment Fund already was an investor, but taking a larger stake in this, what were your first thoughts about the deal?
Uh, the two things jump out immediately. One was the scale. As you said, it's a $55 billion transaction, and if completed, it will be one of the largest leverage buyout deals of all time. The leader now is almost $50 billion buyout of TXU, but it was back in 2007. So that's exciting. You mentioned the sponsors. So we have Silver Lake, which has long history of investing in the tech sector. And the co-CEO, Egon Durbin, had his eye on acquiring EA for years. And they're friends, he's friends with Andrew Wilson, the CEO of EA. Then we have President Trump's son-in-law, Jared Kushner, as you said, Affinity Partners. They have existing relationship with PIF. And maybe the most exciting part is Saudi Sovereign Wealth Fund, Public Investment Fund. They already had almost 10% ownership in EA, so they are not strangers to this company. And over the years, they ramped up their investments in gaming, sports, entertainment globally. So there's a clear ambition there. They want to influence cultural assets, and they want to move beyond oil. What was your first thought,
Well,
then, when you heard it?
that was the element about sports, and obviously I follow the world of sports and business pretty closely. I've found it very interesting to see the Saudi Public Investment Fund make all of these moves that they have made in the last few years in and around sports. You can go back to the World Cup a couple of years ago and the role that they had in that, and some of these other moves. And I find it interesting that this is not making a move on a team or an event, but it's making a move on an entity, as you kind of alluded to, a cultural entity in and around the world of sport.
Yes, so they launched Olympic esports games, which was a very interesting move. They announced $35 billion allocation to expand its footprint in the video games industry through their subsidiary Savvy Games Group. And they invested in Scopely, Niantic, ESL, Faceit, Nintendo, Capcom, Nexon. They're all over the world, and they are heavily investing in video games industry. But EA is a bit different. It's a fascinating asset. It's not just a sports game publisher, right? Its portfolio stretches across simulation, shooters, narrative titles, and large live service platform, which is more than 70% of their revenue. And it's great. The Ultimate Team modes, they are material to their business. You might be more familiar with this, but for our listeners, maybe in the Ultimate Team mode, the players can build their own custom teams. They can use digital cards. They can earn these cards. They can buy these cards, and it's addictive because there's collecting, competition, chance. So it's a bit like sports trading cards meets fantasy sports, and they have all these IPs as well. So all of this makes EA Sports a very interesting asset to buy for
So
sure.
it's not just about what they have right now. It's about what they could potentially bring forward over the next decade or so.
Exactly. So they have the football, the FC, they have the Madden college football. These are very durable year-round engagement engines, which is great. And we talk about the ultimate team style. So that's great for monetization. But there's also room to deepen their live operations. They can constantly update the games with new challenges. They can have special events. They can build more social features. They can build on creator tools. So there is room for improvement, and there's expansion. So bigger global tournaments, events. They can do cross-media projects, and they can go after under-penetrated regions. So there's a lot of opportunities there.
So, but taking it private in this move, take us into that side of the story as to just the importance that companies have
Uh-huh.
when they take a larger, well-known company private for whatever period of time it is, and what they
Mhm.
expect to see, I assume, at some point down the road, to bring it back public.
Great point. First, let me tell you, just because a company goes private, that's not going to be the magic touch. All of a sudden company is not going to get better. But there will be less quarterly pressure, which is something video game companies have been experiencing recently. There have been major layoffs as well. But with becoming private, maybe they will be able to fund riskier bets, and they can re-platform major franchises, and they don't need to explain their every move to public market. So that's good. The other one is the concentrated ownership. So maybe they can rationalize their studio slates, maybe modernize pipelines. They might be able to make sharper capital allocations. The last thing is the ecosystem synergies, because the new owners, they already sit across gaming, esports, media, which could amplify EA's IP across film, TV, events, new regions. And let me remind everyone, the buyout explicitly spotlights IP monetization beyond games, which is where they see the upside. About the IPO, about the exit, that's important. So in the buyout world, once you complete the deal, sign the deal, you don't say congrats. You say job well done. Like, you need to wait for 5-6 years to see whether it was actually a successful deal or not. With a large company like this, probably IPO is the most plausible exit. And this is what Silver Lake did with Dell. It was a $25 billion deal back in 2013. They took the company private, back to public market in about 5 years. So that is expected. IPO window has been tight. It could open up in 5 years, but maybe then PIF will say, we don't exit. Maybe Silver Lake and Affinity Partners will exit, but PIF might sit on this investment for a longer period of time because of the fact that it's a sovereign wealth fund.
So then my question is, then, does this open the door for more similar type of deals? And I say it because you have not only the public investment fund and you have Silver Lake and Affinity, but there's obviously an interest in technology. And we know how technology is kind of controlling a lot these days, especially with AI, that these are the types of deals that companies will look forward to in the future. Ones where there is a known quantity, a known success, but you have these other entities that could potentially be built out in the future.
That is exactly right. So this is first a positive step. We are seeing more deals in the buyout world and the M&A world, so that's good. And there's a lot of interest in gaming and sports in general. So one thing about EA, so their stability and upside gives them cross-platform opportunities, creator-driven, AI-enhanced experiences as well. And we will see how it's going to go. But Microsoft bought Activision Blizzard a couple of years ago as well. So it will be surprising to see more deals happening in this space and tangent spaces.
Burcu, great to talk to you again. Thanks for your time and your insight. All the best.
Thank you, Dan.
Thank
Bye-bye.
you. Burcu Esmer, who's senior lecturer in finance here at the Wharton School.